Slim to none, and Slim just left town. That is to say, you know, that's to say that the Bank of England's already brought rates down to 50 basis points. It's very low levels. We're really looking for some kind of indication about what King's commitment to buying more of these bonds. They've already bought, as the indication was 25 billion. That's a third, and a month into the program of a 75 billion pounds. So we think they're on their way. They'll probably be buying more.
All right, now we did have some action over in Europe, in Ireland yesterday, obviously debt being downgraded. Some concerns over the euro. Do you share those concerns?
Well, I'd put it this way. I think that the dollar, foreign exchange markets typically trend. They trend for periods of years. And I think that we ended a major bear market for the dollar last year, maybe in 2007.
Right.
And so I think we're in an extended dollar rally situation, a bull market for the dollar. I think that behind the dollar, so far the rally has been deleveraging. A lot of people were short the dollar. They had to buy it back. They use the dollar as a financing currency. And so I think that we're in the middle of a dollar rally. But I think we're getting a little bit of a setback here where we consolidate and churn a little bit as we get ready to make the next move, which is positive on the U.S. economy.
So people were using the dollar, effectively doing a carry trade by borrowing on the dollar because we have those low rates here.
Well, I'd say they're doing it not only because of low rates, because in some ways the Federal Reserve was tightening rates, was raising rates as they were doing this carry trade. But generally, U.S. interest rates were low. The depth of our asset markets makes it easy to borrow the dollar, much bigger than the yen carry trade.
Okay, but if the weakening of the dollar is in reverse, you could get hosed on that trade, no, if you stayed in there?
Well, I think this is what happened, right? The euro peaks at 160 last July, and today we're in the low 130s. So yeah, people can. I think currency risk is very substantial, and that's why there's a lot of people in the markets who do not take currencies as an asset class. Corporations are hedgers. A lot of equity portfolio managers use currencies as just a means of transaction. So I think that you only have a small group who really see the currency markets as an asset class, like hedge funds.
All right, now one quick question before I have to go: are we going to see the yen continue to weaken?
I think we'll see the yen continue to weaken, not because of weak economics simply, but I think it's more of a holistic story of people having a higher risk appetite, and then you can sell the yen.
Ah, fascinating. Marc Chandler, always great to have you here. I hope you come back in again soon.
Thank you very much.
That is Marc Chandler, folks, from Brown Brothers Harriman. Coming up, we'll give you the latest on the American captain who's being held